Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 27th, 2025, and we are doing an in-depth dive into one of the most talked about stocks on the planet right now, Alphabet, ticker symbol Google. The news surrounding Google has been nothing short of explosive, so first we're going to cover the major headlines driving this incredible price action, and then we'll jump straight into the charts to see what the technicals are telling us. Fundamentally, the story for Google has become overwhelmingly bullish over the past week. The first major catalyst was the release and overwhelmingly positive reception of their new AI model, Gemini 3, which many analysts are saying outperforms competitors like OpenAI's latest models. But the even bigger news, the story that truly lit a fire under the stock, is the report that Meta is in talks to buy Google's custom AI chips, their tensor processing units or TPUs. This is a monumental development, as it positions Google as a direct and serious competitor to Nvidia in the lucrative AI hardware market, a space Nvidia has dominated until now. This news, combined with a massive $4.3 billion investment from Berkshire Hathaway, has sent a clear signal of strong institutional confidence in Google's AI strategy. The market's reaction was immediate and powerful, sending the stock soaring to new all-time highs and putting it within striking distance of a massive $4 trillion market capitalization. Now, let's look at how this incredible news has translated into the price on our daily chart. We can see a powerful long-term uptrend that has been in place for the entire year. There was a significant breakout in early September when the stock gapped up from the $212 level, and another major leg up in late October. But what we're focused on is this absolutely parabolic move that began just last week. You can see these enormous green candles on November 24th and 25th, which correspond directly with the Gemini 3 and Meta chip deal news. This move blasted the price through the psychological $300 barrier for the first time ever, reaching a high of $328.83. The volume on these days was massive, which gives us strong confirmation that this is a legitimate, institutionally backed move and not just retail speculation. After reaching that peak, we've seen a slight pullback in yesterday's session on November 26th, which is completely normal and healthy price action after such a rapid ascent. The stock is now in a consolidation phase, digesting those huge gains. From a long-term perspective, this chart is incredibly bullish, having established a clear pattern of higher highs and higher lows. The previous resistance around the $280 to $290 area should now be considered a major new support zone if we were to see a deeper correction. More immediately, the low of yesterday's candle around $316.79 acts as the first key level of support to watch. Let's switch to the hourly chart to get a closer look at this recent price action, focusing on the last few days. Here we can clearly see the massive gap up at the market open on November 24th. The price then continued to grind higher, building momentum before the explosive push on November 25th that took us to the all-time high of $328.83. Following that peak, the price has pulled back and is now building a horizontal base. We can see that it's finding stability in a range between roughly $317 and the low $320s. This sideways consolidation is constructive, as it allows the market to absorb the recent run-up and potentially prepare for the next move. Bulls will want to see this $317 level hold strong on any further dips. A break below that could signal a deeper short-term pullback. Conversely, a move back up through the $324 level would show that buyers are stepping back in aggressively. Now, drilling down even further to the 15-minute chart for the last couple of days, we can analyze the intraday battle between buyers and sellers. After the peak was made on the 25th, we saw a sharp profit-taking move. Yesterday, on the 26th, the price action was choppy, trading within a range as the market sought equilibrium. So far today, it appears we're continuing this consolidation pattern. The key intraday levels to watch are the support at yesterday's low around $316.79 and the resistance at yesterday's high near $324.50. A breakout in either direction on this time frame will likely dictate the market's direction for the rest of the day. Volume has tapered off compared to the huge spike, which is typical during a consolidation phase. We'll be watching for an increase in volume to confirm the direction of the next significant move. Alright, let's pull back to the daily chart to put it all together and discuss what might happen next. The fundamental narrative and the long-term technical trend are undeniably bullish. So, let's outline the potential scenarios. The primary bullish scenario, which I believe has about a 75% probability, is that after this brief consolidation, the stock will make another attempt at the highs. A sustained break above the all-time high of $328.83 would open the door to the next major psychological target, which is the price required for a $4 trillion market cap, roughly around the $334 to $335 level. This scenario would be reinforced if we see a strong close above $325 on high volume. On the other hand, a short-term bearish scenario is possible, mainly because the stock is so extended. I'd give this a 25% probability. In this case, the price would fail to hold the current support around $317. A break below this level could trigger a deeper pullback to test the gap-up area around $310, or even the major psychological support at $300. While bearish in the short term, such a pullback could present a buying opportunity for long-term bulls, assuming the fundamental story remains intact. So, to recap, here are the key things to watch. The critical support level is $317, a break below that is a short-term warning sign. The key resistance is the all-time high of $328.83, a break above that signals a likely continuation of the rally. Look for volume to increase on the next move to confirm its validity. The ultimate bullish target in the near term is that $4 trillion valuation mark around $334. Thanks for tuning in to explain the charts. Remember, this is not financial advice. All of the analysis shared in this video is for educational and informational purposes only. You should always conduct your own research and consult with a professional before making any investment decisions.